The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Chart of the day shows long-term holders beginning to accumulate Bitcoin in March 2021. This is from Glassnode, and we'll get into the specifics of what we're looking at here a little bit in a moment. But basically, the supply held by long-term holders peaked right around the end of October. And since then, it's been a significant decline, though not a steep one. This is a metric, something like Bitcoin held on exchanges, which has been at all-time lows recently. Both of these metrics indicating that while November and December have seen Bitcoin prices sagging, we don't seem to be at a point where there's a rush to sell. These indicators at least don't point to a precipice ahead. And in the second half of December, as you can see on the very right-hand edge of the chart there, a slight uptick, modest recovery in supply held by long-term holders. So what does it mean? Long-term holders, this metric should definitely be looked at with, if not, a caveat, at least a clear understanding of what that term means. Glassnode defines it as an entity that on average holds Bitcoin for 155 days or longer. So there is some guesswork involved in determining what is an entity when you look at addresses on Bitcoin. On the Bitcoin network. That activity is very transparent, but as you go from there and try to determine is this address controlled by this entity or that entity, that requires, again, a little bit of heuristics and a kind of a mixture of art and science. So according to Glassnode, any such entity who holds Bitcoin for 155 days or longer is likely to be a long-term holder. And we've certainly seen an increase in accumulation rates for those kinds of entities, according to that chart. Now, this second chart, which we're looking at now here, shows the percentage supply of Bitcoin that has not been active in the past 5 years or more. So for those new to Bitcoin, this number is surprisingly high, I would think. It's now over 20%, as Glassnode itself pointed out earlier this week, hitting an all-time high above 23%. And that it maps to what we've seen from other analysts. Chainalysis, an on-chain forensic firm, estimates that about 20% of all Bitcoin is lost. It will never move. Its owners have lost access to it, probably through losing access to their private keys one way or another. So as an analogy, this is akin to, say, the world supply of gold that is lost at sea in shipwrecks or buried and forgotten, except nobody's going to stumble on this Bitcoin using a metal detector in their backyard.